Good morning, traders. This is Michael coming to you from Game Edge on Thursday, July 10th, with our pre-market prep session. As always, here at Game Edge, we start with our three pillars: sentiment, structure, and trend. If you found us on X today, make sure you like and subscribe and repost our content. And then if you found us on YouTube today, or coming from X, make sure you sign up for our notifications and you'll be notified every time that we go live with our pre-market prep or that we post our post-market session. Welcome everybody this morning. So we'll go through our normal game plan as well as looking at our market trend model and then throwing in a few extra charts and then we'll have time at the end to go over single stocks if anybody has any questions. So starting with the market trend model, we saw a slight move to the upside. Market trend model is based on the tick index. Obviously, that's buying versus selling in the overall market. Our bolded white line is our cumulative tick here. That is showing us who is winning the battle of buying versus selling. Obviously, we saw a little move to the upside yesterday after a consolidation for a day or so, and then a pullback as we were reaching all-time highs. Yesterday, we saw new highs outpacing new lows via our breadth indicator and then via our filtered cumulative tick plus 1,000 minus 1,000 institutional orders or larger block orders was positive to the upside slightly, but not really significant to speak about. And then our overall tick was to the upside. So we did see more stocks being accumulated than sold yesterday or bought being sold. Our longer look back period is our colored ribbon. The red above cyan is obviously a bullish look, and we keep capital or money deployed in the overall market. And as long as we're in a positive slope to the upside, our mechanical P-Trans to PGX portfolio that we've posted extensive commentary and education on via our channels, make sure you check that out. We'll continue to enter positions. Moving on to the SPXA, this is our cruise ships. These contracts are less flexible and turn over less frequently than the SPXP or 0DTE or weekly contracts. That's why we separate these. I believe we're the only service that separates these. And this just gives us a better visual within the overall positioning via the institutions of the SPXA. Obviously, larger contracts, larger notional money. All expiries turned on here were call dominated. Above and below spot prices, you can denote by the net delta. So again, bullish stance continues to the upside. So we'll continue to watch this as we move through expiries of July, which is next week. And then if we see those contracts expire where that money gets redeployed, that will be important and significant heading into the latter parts of the summer. And then obviously if those get deployed to the upside without the money call speculation, then the appreciation of SPX continues to increase. But then if we do see some hedging to the downside, then obviously we'd be slightly more cautionary. But again, fully call dominated above and below spot price. Call speculators are maintaining overall control of the market. Really no change there. Moving on the SPXP, these are our speedboats. Obviously these contracts turn over much more rapidly and are more flexible. So this gives us an idea of what is happening over day positioning as well as a weekly type positioning. Obviously see expiry heading into day for 0DTE and then the rest of the expiries, single expiries for each day. Call dominated above and below spot price. Net GEX fully in the bullish camp at 52,000 there. We see the transition levels drawn here and then some of our significant levels, 6,300 to the upside. That is PGEX there. And then to the downside, we're watching 6,200, obviously psychological level and a round numerical level, and then supportive type action on any pullback within the overall structure and market via price. So again, we'll continue to be getting involved on the upside via pullbacks in this call-dominated positive gamma structure to key strikes below us. So if we do get below 6,200, we might be a little bit more cautionary down towards 6,175 and 6,150. But right now, call speculators maintaining full control. You'll notice down here on the lower right legend, our net GEX expiration, have a significant amount of gamma coming off within the overall expiries of today into Friday. So again, where that gets deployed for next week for the monthly expiry will be important and lead to kind of our positioning for next week, whether that is bullish or bearish via out of the money call speculation or out of the money put speculation hedging to the downside. So moving on to the SPX PGEX ratio, we've been discussing this really for the past overall week. We've seen price basically sideways to up, but the GEX ratio was falling. This GEX ratio is a put call ratio, but it's a better put call ratio because we add a gamma component, which is a time component. We've been discussing the divergence with price sideways to up and the GEX ratio dropping, but now we're seeing a move back to the upside in the GEX ratio and a positive slope. This is indicating more short-dated call gamma going into the overall complex or short-dated call speculation. So again, we want to see this continue to the upside if price is appreciating to the upside, and then obviously be respecting divergences. If we see price up and gamma ratio down, or GEX ratio down, sorry, that would be a divergence indicating that we're not seeing that out of the money call speculation to sustain the upside price movement, and most likely some out of the money put speculation. So we'll continue to watch this day over day, but again, call speculators are in full control, and we're seeing that positive slope back up in the GEX ratio, indicating call speculators are coming back into the overall complex. Delta balance for the today, we saw that dip to 0, and then this recovery now, the red and green obviously separates the left-hand plane and right-hand plane above and below spot price. Heading into the rest of the week, we're looking at a bullish stance, but then after the Monday, we're looking for a drop in the overall delta balance. You see the right-hand plane increasing, but the left-hand plane decreasing, so that's in the money calls could be leaving the overall complex. Reminding that this delta balance is spot price sensitive, so if we continue to see spot price drop, then this left-hand plane will maintain this overall look, but if we see spot price rise, then that will also increase that right-hand plane out of the money speculation as we capture some of those in the money calls as price is rising. So again, out in time, we're seeing some possible weakness into next week. So we'll keep that on the radar to see if that continues to maintain its overall structure and status. But overall bullish heading into today, but possible weakness into the middle of next week. Moving on to the SPXP open interest change. I'm not sure that we've showed this chart in our pre-market prep, but I think it's important. This is how we monitor the overall structure and OI change day over day. You can see obviously the 710 is our 0 DTE. And this is important for our positioning into the day and having our overall game plan. We like to look to see if we're increasing more calls coming in via OI or more puts coming in via OI. And then also we like to look the day over day change for further out expirations. Our puts downside hedging increasing for next week or our call speculation increasing for next week. So again, that would match our overall delta balance as well as our GEX ratio. So it's just a confirmation of what we're seeing via OI change. Again, we do see some more puts winning the battle coming into today. Just barely. Obviously, we can scroll over and see 70,000 here, and then we see 80,000 here. So obviously, puts winning the battle just slightly. But again, if you're a bull, you want to see this call OI outpace the put OI via the overall changes in OI and updates overnight. And then we'll watch our vol-m command, which is our intraday volume analysis, to see who is the mass of participants and where they're positioning via that volume intraday. And that also gives us an indication if we're going to see an upside trending day, an overall consolidation day, or a downside put speculation day via our call and put centroid. So again, heading into the day, we like to look for the change day over day, see who's winning the battle on the OI side heading in, as well as the structure changes to give us an overall game plan for the day. Moving on, the SPXP 0 DTE, our drunken sailor range is outlined via the yellow box. Again, 62.75 to the upside, 62.30 to the downside. That coincidentally matches our index level to the downside. So again, we'd look for any pullback to be supportive. If we get below 62.30, then we may see some more weakness to the downside towards that 6,200 level, again, which is that round psychological level, as well as an important overall structure, option structure standpoint for any pullback. And then to the upside, we want to stay above transition. We do have the confluence of the GEX and DEX transition via the white box as well as the blue box. Again, staying above transition is important for the bullish overall outlook or stance. And then getting above 62.75, 62.80, we'd be targeting the 6,300 level. Again, getting over 6,300 probably will be a large hurdle. unless we see a significant amount of out of the money call speculation, and then we look for a move up towards the 63.35. Coincidentally, that will be our COTMC level. That's where those out of the money calls become in the money, and this is where you start reaching that fear and greed component, which would be a greed component to the upside, and most likely see some monetization into that overhead area again, unless we see a large out of the money call speculation via our vol M command. We see COI up here at 63.50. Not expecting anywhere near that level again, unless we see some news or overall, exogenous events or some other thing hit the wire to give us a large bullish speculation to the upside. And then again, we'll see that via our vol M command. We'll see a spike in out of the money calls and which strikes are being targeted the upside. So we'll be able to view that pretty rapidly via our vol M command as well as our vol U, vol D command. So heading into today, any pullback to transition, we look to get involved to the upside. Below transition, we may see a quick move down towards the bottom of the drunken sailor range, obviously choppy within the overall drunken sailor range. We'd be looking to get long at the 62.30 level, bottom of drunken sailor range, as long as our vol M command and our MTM model is maintaining our bullish stance. Again, above transition, we're looking for 62.75, 62.80, top of drunken sailor range. And then outside the drunken sailor range, we would be long, looking for a target of 6,300 would be that first stop. And then if we see a large out of the money call speculation, 63.30, 35 would be that other stalling area to the upside that we'd be watching. Net stat command, matching our overall target areas. We do have in the money calls via net delta compared to our locked horns. Overall stance yesterday. So again, early morning pullback may be an opportunity to get involved towards transition. In the money calls below us, outpacing out of the money calls. So again, this will be supportive. And then once we reach to the upper levels, these out of the money calls, 62.50, obviously 62.65, way up there on those strikes. So really out of the reach, probably most likely for today. Net charm, we'll see these out of the money calls grow overhead. That's why I was discussing that 63.35, which is a confluence of out of the money calls charm, which most likely will be a headwind, and that COTMC level. So if we reach that level, we'd actually look for some stalling and consolidation and most likely some monetization into that overhead level, and then pull back 62.25 area. We've been talking about that. If we get below transition, that would most likely be supportive type area. Again, 62.25 and 62.30. So let's go ahead and look at our trading view chart for this morning. Heading in this morning, I've drawn the drunken sailor range. I've drawn some key areas to the upside. You can put these on your chart also. So again, same deal. We're looking at transition area here, bottom of the drunken sailor range, also matches COTMP for the full complex. So again, choppiness within the drunken sailor range. Above drunken sailor, would be looking for 6,300 and then 63.20, 3,000 net OI there, and then the COTMC level at 63.30. And then to the downside, below the drunken sailor range would be short, looking for a move down towards 6,200. To get this overall move down towards 6,200, we'd have to see a significant change in the market trend model, as well as vol M command, significantly negative centroids targeting out of the money puts pretty rapidly to the downside. And then we see some confluence of some TA levels come in on some longer term time frames that where we've been supported before. So again, this is a large confluence area of a TA as well as an option structure standpoint. So really not looking for the market to fall apart again, unless we see a large change in sentiment and structure overall. So with that, I'll leave everybody for this morning. Thank you everybody for joining us. If anybody wants to go over single stocks, I can do that very quickly via our web app. Again, check us out online at gammaedges.us, as well as follow us on X and YouTube for our content that we post daily. So thanks for everybody for joining us. Let me know. I'll be around for a few more minutes if anybody wants to go over anything via our market prep for the day via SPX or single stocks. So thanks for joining us. TXS. Yeah, we can look at that one real quick. Let's check that one out. TXS. Not sure it has enough. Yeah, not in our... Oh, thanks. You're saying thanks, Tom. Oh, I gotcha. I was like, I didn't think that was a ticker. So, all right, good. You're welcome. All right. Thanks everybody for joining us. Everybody have a great